A mutual fund is an investment vehicle made up of a pool of money collected from many investors for the purpose of investing in securities such as stocks, bonds, money market instruments, and other assets. Mutual funds are operated by professional money managers who allocate the fund's investments and attempt to produce capital gains and/or income for the fund's investors. A mutual fund's portfolio is structured and maintained to match the investment objectives stated in its prospectus. Mutual funds give small or individual investors access to professionally managed portfolios of equities, bonds, and other securities like commodities. Suppose that you have a small amount now and you want to invest this amount somewhere from where you can have some returns. But you are not sure where to place these funds to be at a net benefit position. You go to an investment firm that provide advisory and investment opportunities. They recommend you to spread your investment in an investment portfolio that contains multiple types of securities like stocks, bonds, and commodities. Just like you, there are other small investors who are not sure about investment and how much to invest in a particular or collection of different types of securities. With this view, small and individual investors pool up their money into a common vehicle called mutual fund. According to the amount they contribute, they have a proportionate shareholding in the fund. Each shareholder, therefore, participates proportionally in the gains or losses of the fund. Mutual funds invest in a wide amount of securities, and performance is usually tracked as the change in the total market cap of the fund, derived by aggregating performance of the underlying investments. From a structural perspective, mutual funds can typically be broken down into two types: open-ended funds and closed-ended mutual funds. Open-ended mutual funds dominate the mutual fund marketplace in terms of volume and assets under management. With open-ended funds, purchases and sales of fund shares take place directly between investors and the fund company. There's no limit to the number of shares the fund can issue. As more investors buy into the fund, more shares are issued. Federal regulations require a daily valuation process called marking to market, which subsequently adjusts the fund's per share price to reflect changes in portfolio asset value. The value of the individual shares is not affected by the number of shares outstanding. Closed-end funds: these funds issue only a specific number of shares through an initial public offering and do not issue new shares as investor demand grows. Prices are not determined by the net asset value of the fund, but are driven by investor demand. Purchases of shares are often made at a premium or discount to net asset value.